I'm going to show you guys the results for the last 12 months. We're going to go through and see the monthly returns. That way you can see the ups, the downs, and the volatility. I'll also share with you some of my biggest learning lessons and takeaways at the end. So definitely watch this video until the very end. In our trade alerts, we've done exceptionally well, where even yesterday, one of my members was telling me that I'm not charging enough money. You can see his feedback right here, where he says, by the way, in 10 days of trading, I have surpassed the 3-month $1,250 subscription fee in profits. Not asking you to raise the price, LOL, just giving credit where credit is due. And you can see his original email right here, where it was sent on May 1st, 2026. Currently, I'm recording this at slightly past midnight on May 3rd, 2026. Anyway, let's get back to the results. Here you can see that on April 1st, I had a balance of about 1.8 million. And then at the end of April, it was about 2 million. Here are the standard disclosures. Here you can see the account summary. I was up about $150,000 this month. Cash, I have about $4,000. The reason why my cash basis is so low is that the brokerage pays a very small amount of interest on the outstanding cash. So I keep highly liquid cash securities in fixed income and preferreds, and they pay about 4.5%. The strategy that I use includes multiple different revenue streams, where we're long stock. You can see we have an equity portfolio. We have our unused cash in fixed income and prefers, which is yielding about 4.5%. Then we also use options, both to generate income by selling options, and we also make money on directional plays by buying options and going long calls and puts. Here you can see the market value over time. Last April in 2025, we were up 6.6%. May was a great month where we were up 14.8%. Then June, we were up 11.2%. July, we were up 6.9%. August, we were up 2.6%. September, we were up 4.9%. October, we were up 2.5%. November, we were up 1.5%. December, we were up 3.6%. January, we were up slightly. Then February and March, we were down slightly. And then April, we were up 8.9%. A few very important takeaways here is that in March 2026, when the market at one point was down about 10%, we were down at our lowest point around 3%. I believe that in March 2026, the market fell around 7%, but we were down less than 1%. And the reason for that is by going long options, both calls and puts, we're able to substantially reduce the volatility in our account. That's one thing that I teach in my trading course, and why I believe that this is the only trading strategy that you'll ever need. And you can use this trading strategy in all market environments because it teaches you how and when to put on hedges. That way, if the market falls 10% in 3 to 4 weeks, you should only be down a small fraction of that amount. And if the market then rebounds, you can simultaneously take advantage of the upside by going long calls and selling premium. So that way you'll be able to take advantage of the upside potential as well, as you can see in April 2026 when we were up almost 9%. In general, we target a return of about 2.5%. And to many people, they think that targeting 2.5% is too low. But the reality is I would love to earn 3.5%, 4.5% every single month as well. The problem is that the higher returns that you try to make, the more risk that you're going to assume and the more volatile your returns are going to be. So if I try to make 6% every single month, then it's quite possible that instead of being down around 1% in March 2026, that I would be down around 10 to 15%. A few other very important things to keep in mind. The first is that some of these gains include long stock. In March or April 2025, I was able to pick up a decent amount of shares in Google at a price of about 150. So those shares alone are showing me over 100% profit. I was also able to take advantage and own Amazon below $200. And I also was long shares of SMH. I made a few highly profitable options trades on SPX, Palantir, NVIDIA, Google, Amazon, etc. All of those were huge winners where it juiced up these returns. Here you can see some additional data where we picked up around $100 of dividends this year. Other dividends were up over $3,000. Switching over to the other account, you can see that as of April 1st, 2026, the beginning value was about $593,000. The ending value was about $690,000. This year, we're up about $85,000. And then, same as the other account, we have a large amount in fixed income and preferreds. The reason for this is you have preferential tax treatment where you're able to earn around 4.5% without paying short-term capital gains. This account was started around March or April 2025. You can see that May, it was up about 2.1%. June was a great month, up almost 30%. July was up 13.4%. August was up 3.7%. September was up 9%. October was up 7.9%. November 2025 was up 1.8%. December 2025 was up 1.4%. January 2026 was up 4.3%. Then we were down in February and March by 3.3% in February, and March was down 2.8%. Again, the market was down around 7 or 8% in March 2026, and this account was down around 2.8%. So there's higher volatility in this smaller account than there is in the larger account. And in April 2026, this account skyrocketed up about 16.4%. Even with this increased volatility, you can still see that we were down substantially less than the market in March 2026, where when the market was down 7 or 8%, and I think at its low point was down over 10%, this account was down by 4.5%. And then when the market turned around and it resumed its bullish trend, we then dramatically outperformed the market by showing returns of about 16.4% in April. The reason why this is possible, where we're able to realize reduced volatility, is because we buy options at the right time and we know how to deploy them. We'll buy puts, we'll buy calls, we'll sell options, we'll go long stock if we feel that the underlying security is undervalued. And all of this is something that you can learn in the options trading education course at beststockstrategy.com/education. This account, relative to the larger account, has a higher concentration of stocks, which is one reason why it's more volatile, because as a stock pulls back, you lose dollar for dollar. Whereas when you use options, oftentimes you're able to reduce and mitigate that volatility while also capturing the upside. If you're using options well and you're not gambling, a lot of people will just YOLO calls and then they'll get steamrolled when the market pulls back. But we don't do that. We don't gamble. But you can see that as of the end of April 2026, this account has about $173,000 in stocks. This account also receives qualified dividends and other income where we've made almost $1,000 year to date. If you have any questions, let me know. If you'd like to enroll, you can visit beststockstrategy.com/memberships. Leave a comment below and let me know your thoughts and ask me any questions that you have. I'd be happy to answer them. Also, drop a like and hit the hype button. That way this video gets pushed out to as many people as possible. And watch the video that's popping up on your screen right now because YouTube believes that you would enjoy it the most.